how to trade the RSI divergence like a pole, a part of 4. How to trade the RSI divergence like a pole, a part of 4. In this video, we're going to discuss or answer a specific question relating to the relative strength index indicators divergence trading. The question is how one can identify the best bearish RSI divergence. All right. So as always, I want to refer traders to part 1. Where does a valid bearish divergence takes place? A valid bearish divergence will take place at the end of an up move, an uptrend, or at a valid resistance level. So what we are about to discuss now, the pattern that we're going to discuss, what we are sharing here, traders must always ask themselves, where does a valid bearish RSI divergence will take place? Either at the end of an uptrend, price forming 1, 2, 3, 4, 5 waves, or price is at the end of a rising channels. Referring traders back to part 1 and part 2. We do not want this video to be long videos, so that's why we split them down. We cut them down, we break them down. So watch part 1, part 2, part 3 before watching part 4, so you may understand everything. So do not just take one piece, go through everything carefully. All right. Part 4. What are we looking for? In order to identify the base bearish RSI divergence, one must use the divergence type 2. You remember we see different types of divergence in part 2. The second types of divergence, that's what we use if we want to identify the best bearish RSI divergence. In this case, we are using the market pattern channels. The first condition is this: the price or the currency pair, the stock or the commodity or the financial security is in a rising channel. As you can see here, I'm using Caterpillar stock. I'm on a daily chart. This Caterpillar stock, this financial instrument, is in a rising channel, highlighted by the red channel. Yes or no? The financial instrument is in a rising channel. While the financial instrument is in a rising channel, look at the RSI period 14. The RSI period 14 is what? Is in a declining channel. Yes or no? Is it? So the first question is, in order to identify the best bearish divergence, the asset must be in a rising channel. So, and the RSI in a declining channel. So we must have a conflicting, market pattern. Price in a rising channel, RSI in a declining channel. So this verification is done. Next verification. All right. The RSI indicator or the relative strength index indicator must now, this is the second condition, change direction and break the declining channel. So here it is, you can see here, it's changing direction here and breaks the red channel, yes or no? You see how we went above it beautifully. We don't want it to be just like this, we want it to break it. So the second condition, the RSI indicators must change direction and break the declining channel. Here it changed direction, but it didn't break it very much. Here it changed direction, but it didn't break it very much. We want it to change direction and to break it sufficiently. See here? Run away from it. Yes. So the second condition is now verified. So the first condition, price is in a rising channel and the RSI in a declining channel. That condition is now verified. We are trying to identify the best RSI divergence. The second condition, the RSI must now change direction for the first time and break significantly the declining channel. That condition is now also verified. So here we are, you see here, change direction here, and significantly break the declining channel. So our second condition is also verified. Great stuff. Now we have what? A bearish trade setup. This is not the signal, and this is not the entry. All right? Now, in the old-fashioned way of trading, trader will just jump on it and sell it. But now we don't recommend that to traders. Sometimes it may work, sometimes it may not work. So we recommend to traders to use a multiple time frame trading method. This will save you all sort of trouble. Be very patient, though it's a bit exciting, all right? Control your emotion and stay calm and be very patient, okay? Because that's how professionals are doing it. Professionals are always patient, all right? Forget about the high frequency traders, okay? So now, the second condition is also verified. The third condition, which is now very, 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 very important, the RSI must now change direction for the second time. So you see here, it changed direction here before breaking significantly the channel. Here, the RSI must start changing direction here. Once the third condition is verified, a TSTW24 or a TSTWSY usual trader may now use a top-down trading method. TSTW24 trader, day trading, we go to the first place time frame to use the TSTW24. TSTWSY usual trader will use the TSTW key 02 to implement, okay, the trade, okay? Wait for signal and select a low-risk entry point. Use a multiple time frame trading method. So you see why I put the spotlight here? So now I have a beautiful, because I know this setup is a beautiful, okay, bearish setup. What I have been saying to traders, without a valid trade setup, okay, there is what? No winning trade. Either it's a technical trade setup or a fundamental trade setup. Economy New can create a trade setup. Okay, the financials can create a setup. Okay, the technical can create a setup. We want to see a setup before we can buy or sell. The investors are waiting for their setup, a scenario that will arise that will give us the indication that, okay, the market is now ready, okay, for bulls, or the market is now ready for bears. So here we have a setup that is telling me that the market is now ready to sell Caterpillar stock. So as a disciplined trader, I must now use what we call the trading drill. Okay, the setup, the signal, and the low risk entry point. As you can see, it worked beautifully. This is a beautiful, okay, excellent, okay, bearish RSI divergence. The RSI stands for the Relative Strength Index indicators. The RSI measures, compares the magnitude of recent gains to the magnitude of recent losses. In fact, the RSI indicator is comparing, okay, the asset itself to itself. Does it make sense? So what the RSI is doing is comparing the Caterpillar stock to Caterpillar stock in this case. All right. So here we see that though the price going up, the RSI say no. This price move is not sustainable, which means it's likely to change direction soon. But it doesn't mean that it's not bullish. We are patient. That's why I say to trade, do not violate the market pattern. Now the RSI now breaks the channels, went back up, and if it's changing direction for the second time, we now have okay, a warning, a bearish warning. We must now use a top-down trading method, and as you can see, it worked beautifully for many days. So after this, if you are a day trader, every day you come in, you are looking for one, a bearish trade. You ignore every, okay, bullish signal. You just concentrate on sell until the price come out of this channel again. On the edge. On the edge every day. Okay, so how many days? Many days, okay? Many months, just rolling it down. Boom, 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 boom. Okay? Does it make sense? It is also powerful. But when you see this setup, my friend, ask yourself the question that I always say to you, you must ask, where does a valid divergence take place? Are we at the end of a trend? Are we at a resistance zone? You must always ask these two questions when you are trading the RSI divergence. So to summarize the video, in order to identify the best bearish divergence, one must first find assets, a financial security that is in the rising channel. While the security is going up, the RSI must stay in a declining channel. So that's the first condition. The second condition, the price is still in a declining channel, but the RSI breaks its own declining channel significantly. Here it is, it changes direction and it breaks the channel significantly. Very, very important, okay? Now, the third condition is that the RSI starts changing direction for the second time right here. This is a bearish trade setup. The RSI is well overbought, confirming to us that there is something taking place here, and we must respond, okay, using a top-down trading method. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you love it, please feel free to share it on Google+, on Twitter, and also on Facebook. If you have any question, put it below, and we will come back to you. If you love what we are doing, feel free to subscribe to Day Pro Trader YouTube channel or to Day Pro Traders website. Until the next time, enjoy yourself and be very happy. We are the TS RSI Pro Traders talking about how to trade the RSI Divergence like a pro, a part 4. I invite you now to follow me to part 5. Speak to you soon. Thank you for watching, and we will speak to you very soon.